Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about the top 4 day trading patterns that I would highly recommend for all beginners to learn, practice, and pretty much understand. But before we jump into the episode here, a couple of things. Don't forget, we're doing the AirPods giveaway. How you enter: like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you do that, you will be entered for the giveaway. Now, the second thing, right now with Moomoo, you guys can get a free stock just by signing up. That's going to be the software that I'm going to be looking at all the stocks on. So you guys can get a free stock by signing up, and inviting your friends, family will get you more stock. And then before you know it, you got some cash, you got some free stock, and you're ready to rock and roll. But we're going to be going ahead, turning to the computer here so you guys can see everything all in action, how to do it, how to maximize your trading, and pretty much overall learn something, get some free educational knowledge. So let's go to the computer and learn some patterns. Let's go. Alrighty guys, so we are up and loaded here on the Moomoo trading platform. So don't forget, you guys can get a free stock just by signing up. There's going to be a link down below. It's most likely going to be the first or second link. Don't forget, sign up. You guys can get a free stock. It's a great platform. So the very first pattern that I would recommend learning is the red to green. This is pretty much one of the best patterns that I can recommend anyone. So we do have ticker symbol LLIT. This was one of the pre-market gappers, and you guys can see it's up roughly 75% today. So honestly, when a stock's up this high, the downward potential is enormous. It's very large. So really what we'll have a tendency to do is the stock kind of start gapping up, consolidation, and then fall. Now during this fall right here, you guys can see it tried to break above this moving average line. This moving average line is the 90-day moving average line. So this is when a stock is pretty much, this is when the stock takes now the moving average line is pretty much the last 90 days of closing prices merged together to form this line. This line acts as support, resistance, and so on. So as you guys can see, it had a hard time breaking above it. So when the stock crosses below it, this line is now resistance. And what we'll have a tendency to see is huge volume, because a lot of people will be selling their positions. So looking at this volume tab, you guys can see it's one of the largest, if not the largest, on the chart right now. So we have this huge sell-off. What we're looking for is buyers to start coming back in the market. Now, how you look at that is you got to be looking at your level 2. Now what we'll see is a huge number of sellers. So on the right side here, because this is the bid and the ask. The bid is the buyers, the ask is the sellers. So what we'll have a tendency to see is a huge number of sellers selling their position, dumping the stock, and then we'll have buyers buying up those positions. So most likely the next couple candlesticks are the telltale sign. So if we get one of these doji candlesticks, this is pretty much where we're having a nice little battle between the buyers and sellers, okay? And this will have a tendency to almost look like a cross with it right in the middle, just like how it is now. So this is a reversal candlestick. So we have this huge green move. Now we have this green little candlestick here. So now the next couple are going to be buying pressure, because we had the sellers already leave. People are going to be buying up their shares, and that's what we get. So what we do is we take that. Whoops, let's grab a nice little drawing tool. I can't even see it. There. We set our stop loss right below this position. So right there, okay? Just because we had this huge sell-off. Now this is going to be the nice little support for the stock. And if we just get some sellers to come back in and crash stock down, we're out of the position. If really most likely a small loss, or even a break even if we can get out of it quick. Now, but maybe 70 or 80% of the time we'll have buyers buying up this position. So buyers start going into the market, and now when we enter this position is going to be the break of this green candlestick. So roughly at $1.85 we enter the position. We ride the wave all the way up until we get some red candlestick. The first red candlestick, we sell the position at roughly $1.88. So right here is a nice little 5-cent gain, and if you're holding a couple hundred positions, you can definitely make some money. And obviously with the more volatile stock, the more money you're going to make, just because we had this huge selling position, boom boom boom. Now, the reason why this isn't a red to green move is because look at this candlestick right here. This is not a doji, so we wanted to enter this position. We're looking for dojis because dojis are telltale signs of reversals. So looking down here, boom, 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 right here, look what we have, a nice little doji. It's almost like a hammer. The hammer is another bullish candlestick, so it either has to be a doji or a hammer, in my opinion. The hammer is just very similar to a doji, but the buyers are coming in faster. So what do we get? We have more buying pressure. Boom, boom, boom. We're entering at the break of this little candlestick, so at $1.73, setting our stop loss probably right around $1.68. So we're risking, what would we be risking, guys? Maybe 5 cents for it to come back all the way up to new resistance would be, 5 to 1 in my opinion. So you're risking, $1 to make $5. You're risking a penny to make 5 cents. So that's what we get here. Setting stop loss right below here, just literally riding the wave. Boom, 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 all the way up. We're looking for the first red candle all the way up right here. $1.90, nice little gain. So now we're looking at a new stock here, NNVC, same thing, huge sell-off. We have a nice little, we have this nice little hammer cross here. Now look at this next candlestick. We didn't enter it just because it did not break above it. The next position, we enter the stock at $14.95, $14.94, riding the wave all the way up, most likely out of the position here with some profit of like 40 cents. So you guys can do it. You have to be quick with it just because of how fast these stocks move, especially when they're gapping up. This stock's up 44%. So you got to be quick with it. You cannot delay yourself. That's why you have to practice before you do it. All right. So as you guys can see, we had this nice little gap up here on CODX. Now there's a couple ways a lot of people use bull flags. I couldn't find one that had a long opportunity, but here's a short opportunity that you guys can do. And I'm going to be showing you guys, if the stock would have went the other way, how you can make money on the other side. So as you guys can see, we have CODX here, and this stock literally started squeezing up from $2.51, hitting a high of almost $3. So nice little 50-cent gain here on the stock. Now, what will have a tendency to happen is we'll have consolidation and then either a squeeze up or a sell off. Here we got a sell off, and this is how you guys can go in short if you have shares available. But if you guys can't, then you can go long if the stock goes the other way here. So let's go ahead and draw some bull flags so you guys can see it. So the very first thing you guys have to understand about bull flags is they happen honestly quite often, and they're by far one of the best ways to make money, especially for day trading. So what we'll have a tendency to see is we'll have the bull pole look like that. So you guys can see that little pole there. Now this is just a stock gapping up super quick in roughly a candlestick or two, sometimes even three. Now the next thing we'll have is some consolidation. Just because when a stock is gapping up this much so fast, we have people dumping the positions and then people buying it because they think it's going to squeeze up. Now, we'll have a tendency to either squeeze up or sell off. So what you guys want to do during this time is draw some trend lines and draw the flag part. So what we're going to do here is we're going to go ahead and draw some. So we're going to click on the drawing tool and we're going to draw some out. Boom. And then let's do it one more time. And boom. So as you guys can see, we had this little bull flag. So this is the pull part and this is the flag out. Now during this time, if this stock breaks above this little descending trend line, then the stock will squeeze all the way back up. We'll have stocks literally do this and go up 20, 30, or 40 cents depending on how fast the stock is. But sometimes, yes, we do get sell off. When the stock breaks below it on the downside, we will have sell off, and this is the best time to go short for this stock. So if you guys would have went in short at roughly 285, you could have covered positions at this support line here at roughly 271. So a nice little over 10 cents per share. If you're holding a couple hundred or even 1,000 shares, you could make $100, $200, $300, $400 depending on your position size. So this is one of the best ways to make money. It happens literally often. The biggest thing is understanding how to use them. There's a nice little mini one right here. We had this pull, consolidation, broke the pull, sell off. It happens, guys. so easily. You guys just have to understand how to use it, because this pattern hundreds or thousands of traders and investors use. So you just got to make sure you're on the right side of it, because you don't want to get in here for a long opportunity just because you're thinking you're getting a better deal on the stock and have the stock sell off. You want to make sure there's a nice confirmation of a break, especially if it broke above $3. This thing could have easily ripped all the way to $4 or even $5. These stocks move so fast, guys. It's ridiculous. All right, so now the very next pattern here is going to be called, it's going to be called a resistant breakout. This is the pattern that I use almost on the daily for my day trading. All right, so looking at LLIT here, you guys can see that this stock had some resistance all the way at here at $1.93. So let's draw that out so you guys can see it. Whoops, wrong tool. Let's draw this out so you guys can see it. So we're going to go horizontal line. So as you guys can see, it came in contact with this resistance once, twice, and possibly even 3 times here. So let's draw that out so you guys can see it. So as you guys see, it came in contact once, couldn't break above it, couldn't break above it, couldn't break above it, and then boom, we had the skyrocket move. This is what you call a resistant breakout. So this stock is literally just gaining more buyers, more buyers, more buyers until we get this huge move up, and that's where we make our money. So we want to get in for the break of this resistance. Even all the way up here at, $1.94, we could have still made a ton of money, over 20 or 30 cents if we would have obviously sold at peak top, but easily 10, 12 cents on this position. So what this is more buyers buying the stock, more sellers leaving the stock. So it's coming in contact with it, and either what we'll have is sell off, which it hits it again and falls. And then we're waiting for it to come in contact with it again, but if it doesn't, we leave the stock, trade the best, leave the rest. But since, boom, we had this squeeze up, we wait for this break of this. This is the confirmation that we look for. So the next thing we get is buying pressure, and right now we're just holding the position for the break, for the first red candlestick or the first doji. So dojis are reversal candlesticks. We look at this one, okay, we have sell-off coming, and we had sell-off. Boom. It's as easy as that. Resistant breakout, resistance coming in contact with recent resistance. So it couldn't break above this line right here. You guys can see I drew it out. So couldn't break above it, couldn't break above it. Once it broke above it, boom, all the way, a nice little squeeze up. Beautiful. All right, now the next pattern here for day trading. This one I used honestly for day trading and swing trading because I wanted to put one in for both. So it's going to be called a moving average bounce. If you guys don't use moving average lines, I would highly recommend it, and this is all right. So as you guys can see, we do have AAPL. This strategy and this pattern works very, very well for blue chip stocks, just because this is where hundreds or thousands of traders are looking for this to work. So what you want to do is you want to draw out or have your moving average lines on your charts here. I always use the 20, 90, and 200. Sometimes I'll use the 9 or the 120. Sometimes even a 500. But really what they are is they take the past, however many you have. So the past 20 days, they put the closing prices and they form this line. The line acts as support, resistance, and an overall trend indicator. So you guys can just look at the stock instantaneously and realizing we have a nice little gradual move, a nice little move up. Okay. So what this stock does is it acts as support or resistance. When the stock is above it like this, it acts as support. So looking at it, it's very easy. It's one of the easiest strategies to learn. So you guys can see it. Comes in contact with the 90 moving average, boom, buying pressure. Comes in contact with again, boom, buying pressure. So once we understand that this stock uses the 90 moving average line as support, the next thing we want to do is set an alert for it to come in contact with it again. It's as easy as clicking an alert, boom, typing in the price that the moving average is at. Not too complicated. So if let's say we left this stock, we got notified here that it's coming in contact with the moving average line. So what we do, we buy position right on it, setting our stops right below it, just because if we got sell off, now the moving average lines act as resistance. So it's going to have a harder time breaking above them than it is almost anywhere on the chart. So boom, it comes in contact with it. We buy some. Now the next thing we do is we wait for a breakdown of it. So it comes in contact with the 20. Now this is a good sign that we had support here. It's a fantastic sign just because now the weaker moving average line is acting as support. So we know it's going to have a larger move. And what do we know? We had a nice little gradual move waiting for some sell off. And honestly, we probably would have sold our position at $321, and we would have entered the position at $319. So $2 profit on this position could easily be, $100 or $200, depending on how many shares you have. But moving average lines are fantastic for day trading and swing trading. Now, if you guys look at swing trades, super simple. Let's just go to a different chart, let it load, and you guys can see the same thing happens literally all the time. And all you have to do is find where the stock is going to be where you have to enter the position. So what you guys want to do, let's go ahead, and you guys can see it hit it here. So you wouldn't have gotten in here just because very, very unlikely, but you just go back and you guys can see how much it happens. It's literally very, very often. The 200 on Apple is bread and butter with it. So let's zoom out so you guys can see it a lot better. So you guys can see it almost comes in contact with the 200 here, and boom, buying pressure. Comes in contact with the 90 here, boom, buying pressure. Comes in contact with it up here, buying pressure. You just have to understand how to do it and how to make money from it. And what I was saying was when the stock's below it, it's resistance. So as you guys can see, we had consolidation here. Once we broke above it, gap up. So really that's how I use those patterns to make money with day trading, swing trading. I hope you guys enjoyed the episode. And if you did, go ahead, subscribe, do what you guys do. All right, take care. Have a good one. Remember to always stay happy, stay positive, and I hope you guys have a great rest of your day. Take care. Peace out.